Hello everyone and welcome to the Marline Trading Channel. I'm delighted to see you again. My name's Benoist Rousseau. I've been trading for over 30 years and I'm a member of the CME at the Chicago Board of Trade. These are the two main global futures exchanges. Let's take a look at the latest market news. Right away, let's get to the main point, the surge in oil barrel prices. Look, over 30% overnight. This doesn't happen every day. It happened in 1974, in 1979, and it's happening to us today. What happened? I think, you've seen it all weekend. Sahel bombed refineries and especially oil depots in Iran, which caused those huge post-apocalyptic black clouds over the capital of Iran. And immediately that set global prices skyrocketing. So some people might ask, there was an embargo on Iranian oil, so we didn't need that oil production, and everything was working fine. Normally, the Iranians should never have been able to sell a single drop of oil. But no. The Iranians still managed to get their oil out of the country to sell to 80% to one country, which is China. And now, for the past 10 days, China can no longer get supplied with Iranian oil since the Strait of Hormuz is blocked by the Iranians. So now, they're also shooting themselves in the foot. So what does China do? It goes looking for oil, from the usual sources, traditional and legal ones, which, of course, is driving prices way up. So, what did those 80% of Iranian oil exports to China represent? For China, that accounts for 20% of its oil needs. So that 20% now has to be sourced elsewhere, from the global markets. This explains the tremendous surge. So the direct consequence is this huge spike that in many European countries, you'll see at the pump, prices will go above €2, even €2.10 for gasoline. And even for diesel, since we're having refining issues. Right now there are tensions in refining and diesel is in high demand. More refining is needed, if you will, or at least it takes more time than regular gasoline. So that's also caused a significant increase in the price of diesel. And the second indirect consequence is for the Chinese economy. Because in fact, they were able to keep their trucks running, develop their industry, and the core industry in China, with 20% of their oil bought at a very low price. Because of course, the Iranians were selling their oil at a discount. The only country in the world that was willing to buy Iranian oil while taking legal risks was China. So, as a result, we might see an increase in the price of Chinese products that use oil in their production. For example, think of petrochemicals. You might see a slight increase, a bit of inflation on Chinese products as well. In any case, it's another significant price hike. It's a bit of a historic moment, so there's immediate excitement. We almost reached $120, but now we're already back down to just over $104. Of course, if the Iranians, Henry Post, succeed, well, they've sent missiles toward refineries in the United Arab Emirates and in Saudi Arabia. Well, for now, they're not really being hit. It's okay, but if we have a major refinery or oil fields that are affected, prices could go up even more. At this point, I think there are Americans who are not at all happy about this mess. Trump must be scolding Netanyahu because it's not in his interest at all to be able to keep this war going for long. If the price per barrel hits $100, that's going to have an immediate effect. There will be very strong opposition in the United States, even though the U.S. is much less affected, because it's a country that can be self-sufficient if it wants to, with shale gas, barrels, oil wells in Texas that had been shut down. You should know that the federal government gives money to producers, especially individuals and small businesses that have 5, 6, or 10 oil wells on their family land. They give them money so they don't produce. Why? Because the idea in the United States, which I think is very smart, is that the last drop of oil in the world should be able to power an American tank. So when oil is cheap, and oil had been around $60 for months and months, so really not expensive at all, the American government preferred to give money to these small oil producers who had nothing to do except cash their checks every month. The check from the federal government? And so they weren't producing, but it remained as reserves. No one ever says that American policy is very simple. When oil is cheap, they buy as much as possible from everyone else, from all the other countries, not for the long term. Here, I'm talking about the long term, over 50 or 150 years, depleting their reserves and preserving their own. The American reserves, now with oil over $100 in Texas. They're going to reopen. They're going to reopen the wells. And so that's why the United States can, if they want to, not quite overnight, since it takes time to restart production. For oil, it takes about 2 to 3 weeks. Even if the wells are well maintained, you have to check everything, go slowly, and so on. But they can be energy independent. So here, I'm putting my money on it. What will happen is that the Texan oil well owners, among others, will reopen their oil wells. And in the United States, they won't see a 30% increase in gas prices like we might in Europe. As for oil solutions in Europe, we do have some, but they're not enough. There you go. That's my little explanation on the subject. Oil is currently at $103 or $104. If there's another escalation and they try to wipe out the Iranian oil industry, let me remind you that we're still far from the record highs. The record highs were around $150, so there's still a potential increase of 50%. But if things calm down, prices will drop at a slow and orderly way. And that doesn't depend on us. It'll just depend on whether there's a massive strike or not on the oil fields. So there's nothing we can do about it. We just have to wait. But look, here we go. I said as long as the levels hold up well, they held up all throughout Friday on the CAC 40, things were going fine. But now, with the tension over the weekend and this oil issue that just shot up by 30%, the CAC 40 just broke through its 8,000 point level and dropped straight down to its monthly support, which it's now trying to hold. So be careful. Today is likely to be a very volatile, very complicated day, and as you can see, European pessimism is higher than American pessimism. In the United States, we're down 1.6%. In Europe, we're down 2.6%, so much more. So today, I think it's going to be the kingdom of short sellers. They'll be looking for a low point, and it could be really, really deep. Some of my students sent me their homework, so to speak, their trading plans for the week, and to many of them I said, your low points are interesting, but you should anticipate breaks below those lows compared to what happened this weekend. And here, as you can see, we haven't even opened the European markets yet, and we're already breaking below last week's low, below last month's low, and it looks like it could keep dropping further. Right now, we're at the lowest levels of the year. So we really don't have any reference points except for monthly support levels that will be marked out mathematically. And they're heavily used by algorithms. That's why I use them. We don't have any reference points. So for a day like this, if you're like me and not shorting, it's a day to just let it go, you know? Let the market fall, and then maybe if we really see a strong potential rebound, try to catch it. Take some positions. Above all, don't try to anticipate. Because if you try to anticipate at a support level, a major monthly support, it's going to hit it. It might look like it's bouncing a little. You get in, maybe it goes up another 10 points, and then within the next 3 minutes, you could get hit with another drop. So at that point, there you go. It's much simpler to just let people panic. That's all. We don't panic. We just smoke our cigar. If you smoke cigars, of course. Or we eat our Snickers ice cream. If you're big, like me, well, that's it. You just wait for things to stabilize, and it's great. The more it drops, the stronger the potential rebound will be on the DAX. We're seeing exactly the same thing. It just broke well below last week's lows. It's just made new lows for the year. It's trying to recover around 23,000. But look, it really plunged. It dropped by nearly 1.5% before having a small bounce to try to reach 23,000. That means overnight it almost hit minus 4%. Right now it's at minus 2.31. It must have gone down to around minus 3.70, minus 3.80. I'm just estimating. It's not extremely precise, but it's just to show you that the downside potential is very, very, very strong. Soldo Jones, look, 46,000, it's dropping, it keeps going. It just hit its lowest point of the year. Same with the NASDAQ, same thing, the lowest point of the year. Now you understand why I'm shorting and why I keep my positions for an average of 2 to 3 minutes. That's it, I sleep very well at night, because right now I think a lot of people who were buying or who own stocks, and so on and so forth. They must have had a rough weekend, and right now we're not sure it's over. I'm telling you, if by any chance we have more oil fields, refineries, or oil stocks getting bombed, oil prices could shoot up again and the indexes could drop again. In my opinion, they're going to be extremely careful now. They're going to be extremely careful. We might be able to see this as a warning. But the problem is, the Iranians have elected a new religious leader. And actually, he's the son of the one who got taken out before. And the message from the Iranians isn't exactly a peaceful one, let's say. He's the worst candidate that the Americans could have imagined, since he's even worse than his father and actually spied on his own father. He wiretapped his father and was the mastermind behind the massacres of the students a few years ago. He's the one responsible for those massacres. From 2 months ago now, or maybe a month, I'm losing track. He also has a warped sense of time, so he's from the hardest line faction. He was the candidate of the Revolutionary Guards, because he himself comes from the Revolutionary Guards. Well, he became an Ayatollah a bit too quickly, and let's say it's all about his clan. Actually, it's not even just about his clan anymore, it's about his family. And what's kind of funny, okay, let me go full screen to tell you this. What's actually pretty amusing is that here we have the son succeeding the father. So those words, the Iranian Ayatollahs have just reinvented the monarchy. They succeed each other from father to son. So there you go. They got rid of the monarchy back in the 70s or 80s, if I remember correctly, with Ayatollah Khomeini. And now they've just reinvented a monarchy all over again. Let's get back to technical analysis. But still, it was worth making that little comment about the 5,500 at Willard. Sorry, let me just go back to NASDAQ for a moment. Look at how clean that is. So I was sleeping, an alarm went off, but I didn't hear it because I had turned off my phone. Anyway, we're exactly at 24,000, the lowest point of the year. Just look at how beautiful that is. The 1,000 level, I always say, the 1,000 level is something you can't miss. It bounced back by 250 points. You really couldn't afford to miss it, but for me, it was a bit too late, between 2 and 3 in the morning. Ah well, never mind. But it's yet another proof that the market is really driven by algorithms. Man, that algorithms are friends. I've been trading for 30 years, and I can assure you one thing. It's much bigger now, sure, but it's easier to trade now than it was 10, 15, or 20 years ago. There are areas with a predictability rate of over 90%. That's what I teach my students. That's it, period. We didn't have this kind of algorithmic precision 15 or 20 years ago. On the S&P 500, it's the same story. A rebound in the 6,600 zone, but now we're really in free fall. They're very worried, and you can really see how anxious they are, because even their declines, they lose 1%. Gold is a safe haven, and so on, and so on. And now it's down by 1%. Bitcoin is stabilizing after, we really believed in that surge up to $74,000. A lot of people got excited, and I imagine that on social media, everyone was already talking about $100,000, saying Bitcoin is going to $1 million. But no, it didn't last long as it dropped back down to its lower level, around $66,000. The lowest point is $64,000, and we're not far from that. This shows us that the situation is making the financial markets very nervous. Why is it worrying them? Because things are starting to get a little bit out of control. Refineries in the east have been blown up, so of course that's a 25 to 30% increase in energy prices. Gas has been cut off. Qatar has completely cut off gas as a precaution. But prices are skyrocketing. So we're going to get hit with a pretty strong wave of inflation, and of course it's going to affect everything. It'll even affect pasta, because they'll say, yes, but pasta has to be transported, and gas is more expensive, and so on. I hope they're not putting oil in the pasta, but in any case, plastic. Plastic is used to preserve pasta, and transportation costs for tourists are going up. That's also going to be used as an excuse. The government will say, we are going to take action, we are going to monitor, we are going to control, we are going to crack down on abuses. It's just talk, because let me remind you that in 99% of countries around the world, prices are deregulated. So my baguette, if I want to sell it for €1, I can sell it for €1. If I want to sell it for €1.80, I can sell it for €1.80. The state can't say anything to me as long as there are people willing to buy it. I see it at €1.80. That's as simple as that. Prices are free, unless we go back to a communist dictatorship with fixed prices. Sure, it might look good on paper, but people couldn't find baguettes. So baguettes were 90 cents, but you had to wait in line for 6 hours just to hope to get a baguette at 90 cents. And actually there weren't any. So it's up to you. If you want low prices but no product, or if you want a chance to get the baguette. And my baker will choose to adjust their price based on the cost of ingredients and also on how greedy they are or aren't. What more can I say except be careful? The American markets have switched to daylight saving time. So if you're in Europe, for example, still on standard time, the markets, I'm speaking especially for the French-American markets that usually open at 3:30 p.m., will open at 2:30 p.m., which means they'll close at 9 p.m. or 10 p.m. I'm saying this calmly. I know I'm going to get 10, 15, 20 emails from people in a panic, telling me it's 9:10 p.m., there are no more quotes, my broker is terrible, nothing works, etc. It's not the broker that's the problem. All right, with that, I send you my best, and I'll see you tomorrow. Of course, for good morning trading. Take care of yourselves. Ciao, everyone.